brokerages bet big on Interglobe Aviation, Skipper and Avenue Supermarts. The stock surged anywhere between 4 to around 8% today. And the insurance regulator approves the new surrender value regulations that entails higher disbursement for higher duration policies. The regulator also approves the Bima Sugam. HDFC Life, ICICI Prudential and Max Financial saw anywhere between 1 and around 5%. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the data points with regard to today's trading action, and we'll also get you set for tomorrow's trade. I'm Nigel D'Souza. Well, and we have got you covered for the next 20 minutes or so. All the big news, all that transpired on the Lal Street. We'll also get you some corporate voices and what you need to track for the next trading session. Let's kickstart the day by doing a quick recap of today's trading action. Well, the Nifty ended low with the cutoff from 80 to around 100 points odd, but the mid-caps, they outperformed in today's trading session. The Realty Index, well, that's been a little bit under the weather. You know, if you look at it in the last 1 month or so, it had corrected a little bit from the top, but today the Realty Index actually made a bounce back. And, you know, most of the street have believed that maybe this cycle is different from the earlier cycle because this time around balance sheets are in far better shape. And we're seeing a lot of cash flows for these real estate names. That's why in the past 1 month or so, though the Realty Index has corrected, well, bulk of the street believes that in fact there is still more to go out here. And brokerage calls, well, they gave direction today. Volumes weren't very high. So you had brokerage calls on Interglobe Aviation, diagnostic companies, well, they moved those stocks. Even Skipper, a smaller company, well, that one as well was up and about in today's trading session. But let's get to what all is lined up on the show for you today. We start off with all the top movers and shakers of the day. Vivek will join in with regard to that. The stock of the day was Interglobe Aviation. This on the back of the positive brokerage commentary coming in from lots of brokerages. Stay tuned as we'll tell you the key reasons behind its rally. Last but not least, we'll delve into the key market events to watch out for tomorrow's trading action. Well, let's get straight to our first segment of the day. Vivek joins us to tell us all the top movers of the day. Vivek, over to you.
Well, thank you so much for that. An interesting trading session. You know, the first up, the set of stocks that did quite well was the entire insurance pack. A significant overhang in terms of, the surrender values or something that went past them. The entire pack moved, but the stock on the radar that moved the highest, the one that had corrected the most was Max Financial. So that was the stock to keep on the radar. Dr. Lal PathLabs, the next set of stocks, diagnostic companies, you did see an upgrade coming in from Kotak on this particular stock. It was a double upgrade. And on the back of that, this particular stock moved over 6.5% in the session today. The next stock was Indigo. Interglobe Aviation, the company met analysts the last week. And after that, a whole host of analysts were enthused by the prospects. A couple of upgrades coming in, names like Jefferies, etc., upgraded the stock. And that particular stock, too, moved almost 6% higher in today's trading session. Then other stock we alluded to in the show was Skipper. Interglobe, brokerage house initiated coverage on the stock. They're quite positive in terms of the T&D opportunities that the company will have. And on the back of that, the stock ended high about 7%. The other set of stocks that did quite well was the entire railway pack, making a significant and a strong comeback. So names like RVNL, Railtel, Ircon, IRFC, even a wagon maker like Jupiter Wagons, all of them joined the rally when it comes to the railway pack. Mankind Pharma, a very large block deal happened in this particular name. After the block deal, analysts started estimating that this particular stock could make it into the passive funds. So, on the back of that, a very sharp recovery, and the stock ended near the day's highest point after, starting the day almost 2.5% lower. On the other hand, what actually dragged the market lower, it was a set of banking stocks. So financials underperformed. Large cap names like SBI, HDFC, Kotak Mahindra were amongst the laggards, and even smaller names, those stocks too witnessed selling pressure. Bharti Airtel, very interesting, this particular name. The last, the stock saw, quite a bit of selling pressure and ended almost 2% lower near the day's lowest point. And Brigade Enterprises, one of the top laggards when it came to the NSE 500 index today.
Okay, all right, Vivek, thank you very much for that. So that was the day gone by. Let's welcome our guests and get some perspective on things as well. We have Bala of Cash the Chaos joining in, as well as Sudip Bandyopadhyay of Inditrade Capital. Gentlemen, thank you so much for being with us. Jay, let me open out with you and sort of get a sense on how you're reading the technical picture now, because we've had this consolidation over the last couple of sessions, but the broader market is trying to show some signs of stability. What do you make of things, both for the Nifty, Bank Nifty, as well as the broader market?
Yeah, thanks, Ruby. See, the 21,850, 830 level is very important from a medium-term perspective, and that should hold for the bulls. If that gives way, we are in for a medium-term correction, and this market would have done its distribution. And key stocks like Reliance are, showing weaker signs. And for the banking index, it's still marking time, but holding above important support at 45,600. But if you look at cross assets, if you look at the Indian 10-year, it's developing an inverse head and shoulders pattern. If we see a close above 7.1 on the Indian 10-year, I think the rates are set for much higher move. So that will bring in negatives for the banking sector. So watch the Indian 10-year yields. It's today I think it's close to 7.095. So if it closes above 7.1, I think it's going to bring a lot of negatives for the banks.
Okay, all right, got that. Sudip, going to come across to you. Want to talk about a couple of stocks that were moving around. Interglobe Aviation, that was a stock that just took off today after a slew of brokerages rolled out positive commentary on the company. Upasana joins us to run us through what analysts made of what they had to say. Upasana?
Well, Motilal has given a neutral rating on the stock with a target price of 3,510 rupees. It says that the Indigo is working to increase its international presence through strategic partnership and loyalty programs. The company has also added 7 new destinations and 19 routes in FY24, and management is making efforts to increase its global brand awareness as it expects to capture a bigger share of growth from its international markets in the coming years. However, the competition in the sector is expected to intensify with the resurgence of Air India and entry of a new player. Well, MOSL remains positive in the aviation sector. It believes that Indigo would have to navigate through various challenges in the near term to medium term as well, and it has reiterated the neutral rating on the stock with a target price of 3,510, valuing it at 7.5 times the FY26 EV to EBITDA. Also, Morgan Stanley has also given an overweight with a target price of 4,145. It says that the company remains positive and FY25 growth guidance is also ahead of what Morgan Stanley estimates. In terms of yields in Q4 are running ahead of the guidance provided by the company on a Y&Y basis.
Okay, got that. Thanks very much, Upasana, for those details there. So, Interglobe Aviation definitely taking off today. Let's actually move on and look at one more name that was in focus, and we're talking about an upside over here. Skipper and Avenue Supermart, both these stocks rallied after bullish brokerage notes. Incred initiated an ad rating on Skipper as it showed signs of a rebound after 2 years of a slowdown, while ICICI Securities has upgraded Avenue Supermarts to an ad rating from hold, as that brokerage expects the company to outperform Nestle India in the medium term. Vamakshi is joining in with the details. Fill us in, Vamakshi.
Well, absolutely. Let me first start off with the brokerage note that came in from Incred on Skipper Limited. They have initiated coverage with an ad rating, like you rightly pointed out, with a target price of 400 rupees per share. Now, some of the key factors that they've highlighted is that the T&D space is showing signs of a rebound after a 2-year slowdown. In fact, the domestic transmission line order placement activity is expected to provide visibility, and Skipper is expected to capitalize on this opportunity, given that it is not only a big player in India, but is in fact one of the top 10 global T&D structure makers. Apart from that, there's a huge thrust coming in from the renewable energy space, and in fact, India is targeting nearly 500 gigawatts of renewable energy, and to ensure successful integration, it is important to have a very strong transmission system. In fact, IEA projects that there could be a 50% rise in global grid spending over the next 10 years. In fact, Skipper's own business, T&D and infrastructure businesses, are on a high growth path. Order book has seen a jump of almost 2.7 times in in the last 2 years, and this was largely led by an order that they received from BSNL recently. InCred expects the company to maintain consistent margins and sees a healthy CAGR in revenue of around 28% till FY26. On the back of that, keep an eye out on Skipper. But DMart, the stock, ICICI Securities has upgraded the stock to an add from hold earlier, but they maintain and hold on Nestle. They're expecting DMart to outperform Nestle in the medium term. They've gone ahead and increased DMart's earning estimates for FY25 by 2% and FY26 by 4%, and the target price has also been raised from 4,100 to 4,800. And some of the key factors is that the premium over Nestle has reduced from around 50% to just 8% now. Known problems with limited downside business risk is what they've highlighted, and they nearly see 18 to 21% CAGR in revenue with consistent 6 to 10% same-store sales growth, which is much higher than some of the other FMCG companies, and they also expect to see healthy net profit margin despite subdued margins. Overall, they believe that, however, Nestle, the positives has play out. They are expecting time correction in the stock price, and they believe that the revenue growth outperformance versus peer is likely to decelerate. So on the back of that, Skipper as well as DMart both were in focus today.
All right, Mamakshi, thanks a lot for that. Well, Sudip, let's come across to you. Do you like any of these companies? Brokerages have got these stocks excited. Interglobe, you had Skipper as well as DMart. Your view?
Well, I do like Skipper. I think that is one sector where there is a significant tailwind, and the Skipper being a kind of leader in T&D structured business with a global footprint, I think they are expected to do well. With this surge of green energy projects, again, that's going to be a positive for Skipper. So yes, for a long-term investor, Skipper at current valuation also looks good. As far as Interglobe is concerned, I think I maintain my neutral view. The company's commendable performance they have shown over the years and even in recent past. But aviation is a cyclical industry, and too much dependence on pricing of aviation turbine fuel. So I will wait and watch. There is significant competition coming in the near future, and the demand supply scenario, which is completely in favor of Indigo today, may not remain such in the near future, and we'll have to wait and watch how things pan out. Of course, the strategy to expand international routes, which is higher paying, is definitely the right strategy, but I will still maintain my neutral view here. As far as the DMart is concerned, I don't really understand the comparison with FMCG stocks. I think we should rather compare with a trend which has a Star Bazaar or a let's say a Reliance Retail standalone Reliance Retail performance, and that's where we have to see. We also probably need to see how these quick delivery companies are performing. Whether it's a Zepto or a Instacart or even Blinkit, I think we need to compare with these companies and their growth and the competition which is going to hit DMart in the near future. So while it's a very well managed business and they have done phenomenally well over the years, I will again wait and watch as far as DMart is concerned.
Okay, all right, got that. Thanks for that, Sudip. Just stay with us. Let's track another sector actually that was in focus, the insurance sector, and there was some relief that came over the weekend. Yash joins us to break all of that down for us. Yash, tell us more.
Well, Nigel, the fear which came from, the insurance regulator's proposal to increase the surrender value and hence impacting the margins negatively got completely negated today with the final regulations coming in favor of these life insurance companies. As far as, in a nutshell, if I have to sum it up, in December 2023, the regulator had proposed increasing the surrender value by as much as 2 times of what it exists today. But in the final regulations, again, there has been some sort of reversal which has been done, and surrender values have been fixed more or less at the same level to which it exists today. If I have to explain this through some numbers, then in that case, if a policy is surrendered in the second year, then the surrender value has been fixed at about 35% versus 84% fixed in the draft paper. If it's surrendered in the third year, then it's fixed at about 35% again versus 84% in the draft paper. If the policy is surrendered between the 4th or the 7th year, then the surrender value is fixed at about 50% versus 88 to 93%. which was proposed in the draft paper. Significant amount of relief came from this particular, retreat in terms of the surrender value, which means there will be very limited or no impact on the margins for these life insurance company. Now, interestingly, the two stocks which were excited because of this news were HDFC Life and Max Financial Services, because of the large exposure compared to other players to non-par segment, and particularly Max Life Insurance because it had the valuation support going with it as well as compared to HDFC Life. LIC and SBI Life have limited exposure to the non-par segment and hence won't be impacted as much because of the regulatory relief coming on surrender value.
The balanced approach came out well. The IRDA has nudged the sector to come up with a separate stream of products which have higher surrender values, and a little bit has been adjusted to increase surrender values in the existing products. So overall, for the sector, it's fine, and I think the growth of the sector would have been impacted significantly as well. That would be also maintained. With this change now, there is very little impact and far, far lesser, if I might say. We are still doing the math. We are awaiting the final master circular.
All right, so that is one of the industry participants talking about the potential impact. Both of our guests are with us. So let's quickly get in a word. Sudip, you fill us in. The overhang is out of the way. The question is that, should you be buying anything in life insurance afresh? And if so, which stock will get your pick?
No, absolutely, Surabhi, we should buy life insurance. Anybody constructing a long-term portfolio should have life insurance stocks in that. There's absolutely no doubt that life insurance has a significant tailwind. Considering the under-penetration which we have in India, I think they have a long, long way to go. So some of these well-managed life insurance companies like SBI Life, I would say, and also Max Life for this at this point in time, considering the valuation attractiveness, I think is good long-term buy. One has to remember that this particular IRDA reversal of stand, and keeping the surrender value at pretty much the similar levels at which it was before, does help non-participating policy, the companies which have larger non-participating policies. So HDFC Life and Max Life do gain significantly. But having said that, for a long term, SBI Life and Max Life should be looked at.
Okay, got that. Thank you, gentlemen, very much for all the perspective and all the advice you've given us today. Look forward to connecting again soon. Well, with that, we do have to take a very quick break, but we will come back on the other side with excerpts from our exclusive conversation with Raamdeo Agrawal. The market veteran talks about how investors should look at this market and their portfolios given the recent volatility, but keeping a more medium to long-term perspective in mind. Back in just a moment with that. Welcome back. Here with us on Market Forward, and as promised, let's get you excerpts from that exclusive conversation that we had with market veteran Raamdeo Agrawal. Remain invested in the market as the long-term outlook remains very, very positive. That is the word coming in from Raamdeo. He discusses market valuations and the recent mid-cap correction in this exclusive conversation with us, and also tells us that he's expecting the Nifty to compound at 15% every year, doubling over the next 5 years. Take a look. So how do you look at the next 3 years, given the fact that it's been pretty much a nice one-way ride from COVID onwards?
Correction will happen. Don't ask me when and why.
Okay.
But it will happen. It has happened for the last 40 years. It will happen again. You know, what will spur that? I don't know. It might be just the supply. There will be so much of supply that every day you are taking $1 billion from the market by block deal. Clearly, there will be correction. People will get fed up.
And now government is not even selling. The PSU divestment is not even started.
Yeah, so government should also sell. This is a golden opportunity for them. I think post-election, the news FM or whosoever is in charge, DPM and all, they must sell. If they don't sell, then this is a vested opportunity. Because they must use, by selling 2 lakh crores, they must go and build whatever fancy roads they want to make. Instead of 4 lane, you must make 8 lane roads. But you must sell. So clearly, I mean, see, the overpricing is not a healthy thing. If something should trade at 15p, and if it is trading 35p, see, the person who's holding the stock, he loves it. But it is a completely wrong thing. It is not healthy at all for the market. Someday it is going to collapse.
So correction will happen.
Correction will happen.
But next 3 to 5 years, what kind of a market are we looking at, and how should we gear up? How should our portfolios be ready for it?
Yeah. So it is dependent on the fact how the corporate profits move. If a company keeps making losses, it is worth $5 only. Whosoever is buying, it doesn't matter. God comes to buy, then also it is worth 5 rupees. Because it is making losses. So if the earnings, which is say Nifty earnings, let's talk about broad. So this year, our guys are saying that we will earn anywhere between 980 to 990, 975, something closer to $1,000. Next year, the forecast, what they can see as an aggregate, is about 1150. So they're saying about 15%
earnings growth.
Earnings growth is possible. And now that could be in reality, I mean, generally things are going better than what they're saying. So it could be 1170, 1180. That as time comes, they will revise. I mean, it also depends on rate cuts and a whole lot of things. So, but then trajectory of the earnings is about 15%. My multiple, see, it is P multiplied by earnings. So earnings are, this is the outlook for the earnings. P multiples are pretty rich at about 21, 22. I would say that if it is, say, 20p, so that gives me a minimum of 23,000. And if it is 22, then you can do about another 3,000. So we might end up at 25,000. That is the most optimistic, I would say. The outlook is clearly, you know, going up and up right now. The momentum is positive, PMI is positive, everything is looking good. Tax collection is very powerful. Every month you get the high-speed data.
Correct.
You know, so tax collections are very strong. In fact, it is beating the government expectations, revised budgetary estimates also. So clearly everything is, right now, there is no reason to say that earnings are going to collapse.
So as we look at this wave, where we are probably 2-3 years into this bull market, what is the one lesson that you would want everyone to remember?
One is don't time the market. You'll always give a lot of jitters unnecessarily. There could be sharp correction, there could be deeper correction. Stay invested. Have faith in this country's future and future of this market. It can give you pain for sure. Nobody can guarantee you a straight kind of thing. But in last 40 years, I have seen when things were not as good as what it is today, things were not looking as rosy in 2000 or 92 and all. Still, it has given 15% return compounded. And you know, power of compounding. So better your investors know power of compounding first to really feel the future. Because future you can see only with the past. If past has compounded for 15% for last 40 years, I have no reason to believe, to say it will be even 14.5. I would say rather 15.5 because of optimism, but I would say stick to 15 only, or rather consider 14.
Okay.
And 15 means you're saying every 5 years it will double. Every 5 years. So let's leave first 5 years.
That's index will double.
Index will double.
15%.
Of course, then you should do much better as an active participant. So 22,000 will go to 44,000 next 5 years. I would think in 5 years, index should touch about anywhere between 40 to 45,000.
Mr. Agrawal saying it as it is, he believes 15% earnings growth is very much doable on a year-to-year basis. Also says that watch out, the index in the next 5 years could potentially double. So the Nifty would move to around 45,000 odd. Interesting comments coming in there. Well, before we wrap up on the show, let's bring you some key market events you need to track. Manglam joins us to run us through that list. Manglam, take it away.
A lot of micro movers in today's trading session, but can't keep our eye off the macro. So let's start with Bank of England's quarterly financial monetary policy statement that will come by tomorrow. Also, at the same time, we will get the Eurozone's consumer confidence data that will tell us the way forward for that space itself. But coming back to the micros, we have a board meet coming in for REC. They will consider that FY25 market borrowing program, and additionally the board of Karnataka Bank meets as well tomorrow. They will consider and approve the issue price for all the qualified institutional buyers for them. And finally, also watch out for Vedanta. The stock goes ex-dividend, the interim dividend that they had announced of 11 rupees. So if you see 11 rupees shaved off the Vedanta share price tomorrow, it's not because it's fallen, it's because it's gone ex-dividend.
Appreciate that, Manglam. Thanks a lot for joining in and giving us all of those details. For the time being, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Thank you for watching.